Welcome back to Tape Reading Concepts. My name is Nikolai. In this three-part video series, we will dissect the COMEX gold market during the fourth week of June, and I will explain the rationale for some of the positions that I took this week. The market map here starts with fresh weekly lows found here within the tail end of the Friday session from the previous week, and we reach here the low 60s. There's no gap with the Sunday night open, but price promptly rallies back above this reference point here in the upper 60s all the way up to the mid 70s. And the first really interesting structural piece is this parabolic collapse here, where even though the price action is similar to what we had previously, we see a higher low and just as strong of a reaction back to the upside. We promptly see new highs and follow through further within the course of the European session with very bullish implications, since we managed to climb above the structural high left here by the last wave on Friday. As we close in on the US pre-market here after 7 o'clock, we see a tentative base here break, and price comes back down to test the next higher low left here in the mid 70s. Initially this horizontal level of interest holds, and as the door builds up here, price goes back towards the highs. We come back again to test that door. There's the same amount of pressure here and the same structure that we see as we're attempting on the horizontal level, but ultimately price separates, leaves a higher low, and follows through back towards the highs of the session here around 11 o'clock. Even though there are some potential opportunities here around the door structure, I'm tend to maintain a relatively conservative posture within Monday sessions, waiting for more context to build up and for a thicker confluence to be present before I take positions on the week. If you're interested in learning more about concepts such as the door, then do consider joining our mentoring community. What we see here in the late morning and afternoon session is significant reduction in volatility. This is something that we also observed within the Nasdaq market, which I did dissect in the previous video. You can check it out from the link in the top left corner. We did build up this base here in the lower 80s, and then in the beginning of the Tuesday session we did see finally an extension here into new highs. So the structural pieces that are left behind are a solid base here in the mid 70s and new highs yet again here in the beginning of the Tuesday session. The behavior is so far consistent with what we saw in the beginning of the previous session, Sunday night over to Monday. This was the first interesting anomaly to this bullish sentiment. After rallying to new highs, price takes a sharp turn here. Notice 1790 is where we turn, and then we promptly break the base, take out all the late buyers here to this party. And then we follow through here, orderly selling down toward the base. In the prime time of the European session, we would expect a test and maybe even a break of this door. Nevertheless, the buyers step up and do something that we have already seen before. They take price through the same levels here in the high 70s all the way up here into the high 80s with very steep movement. Now the higher low here implies that there will be potential attempt on 1790, and nevertheless in the beginning of the US pre-open we see another sharp reaction and next to no granular price action here on the turn, so hard to grab an opportunity. But the fact that we saw both a higher low and a lower high suggests that we are still balanced in the middle here of the box, or the previous range, the previous day's trading range. There was a lot of strength on the way down, and what we saw here around 8:30 is a very peculiar and very compelling price action. As we open this door here, price takes out the majority of the positions running the stops of everybody who still might be maintaining long positions since the beginning of the regular session on Monday. Yet it promptly rallies here above the door, and you can see here how there's significant pressure within the roughly 25 minutes between 8:35 here more or less and 9 o'clock. So there's definitely significant demand for the prices despite the break of a significant horizontal level. This is where I decided to participate, putting my order so that the $300 per contract stop that I tend to assume is used 2/3 as an entry, and then 1/3 of the stop for safety behind the lowest point of this swing. Sharp reaction back above the door, an immediate follow through, very reassuring if you're in a bullish position. My projection here, having in mind the market map, is such. I did use the lowest point of the regular session on Monday. I did use the overnight highs here on Tuesday night, and of course this well isolated extreme here at the bottoms in the pre-market on Tuesday. Very clean cut through the range here, great symmetry here with the handles, and a bullish projection. You can see that the middle of this projection points towards the upper 80s, and a logical rotation back towards the top of this mean reverting behavior. Now my target here was along the downsloping line, assuming that I might be experiencing some type of a pinch in price. This would have been the most conservative target to go for. You can see that the two lines here seem to be pointing for a meet right around 85, which would be a relatively conservative and safe exit. Looking at about a 4-to-1 opportunity with positioning around 73 on a $300 per contract risk. Here with the opening bell, we did get a retest of that base, and as I expected, the buyers will step up and defend their position. There was already a well-established bullish position here in the pre-market, and with the successful retest and with the successful test and retest of this space, you can see here all attempts were made here to break this bottom, yet nothing happened. The buyers definitely stepping up on a higher low and sending price back towards the high, somewhat similar to what we had right here on Monday, except the lean on the except this pivot component here, where price leaned and took out the long positions established on Monday, in effect turning them over to participants here in the regular session on Tuesday. My target here was again in the mid 80s. You can see here where I had it placed. I did assume that this rally here is going to bring a new high and a rally promptly to my target. Since I was in that position for more than for about an hour and a half to 2 hours at this point, I don't watch every bar within these positions, because I do trade up to 4 or 5 markets depending on the focus and amount of volatility that I observe. The risk with trading and keeping a target against the downsloping line is that as time develops, your target is should be moving lower and lower. But since I was not watching every bar intently, I did miss this rally here in the mid-afternoon session, and just a few ticks short of my initial order. Very disconcerting. By the time I noticed it, price was already back here below the high, and towards the end of the session I had to take a decision of how to approach the ongoing situation. Now, on one hand, this is still a very bullish situation, because we observe nothing but higher lows and higher highs here within the regular session. On the other hand, the downsloper seems to be causing a very sharp reaction in price. I decided to first reduce the risk and collapse the stop to just $100 per contract here, in effect staying just a handful of ticks below the shoulder here where I got positioned, and of course looking to turn the intraday situation into an inter-day position should potentially involve exploring the larger idea. My projection at this point is that if I'm to wait for another rally, then I must play for something beyond this potential downsloping ceiling, and the next logical projection is either here into the next high here in the upper 80s or potentially 1790. Of course, if this takes a significant amount of time, the upsloping potential target could send us even into new highs, which would not necessarily be unlikely, having in mind that so far we are defending here the low 70s. So I did move the target higher. Very good to see here in the beginning of the Wednesday session that price is reestablishing support at the lower sloped reference point, test and retest. Notice also the symmetric, orderly, relatively same size pullback here situation as we're moving now in the bullish rotation between the bottom of the range and the top of the range. Here overnight in the European session, no surprises, orderly buying, higher lows and higher highs, and by the time we arrive here in the US pre-market, I have already seen price translate on the backside of the downsloper, suggesting that indeed a further target should be explored. We did get a test on the backside of this reference point, and then we did rally to new highs, in effect hitting the shoulder here around 1787. Now with such a steep rally here in the pre-market, I would have expected that maybe we're gonna get immediate follow-through. This didn't happen. We came back all the way down here for a retest of the backside again. This is the first time that we got a rather meaningful separation below the lower reference point. We do not use these as support and resistance. They are just reference points. But this is a potential red flag since we have already rotated to the top of the trading range here. You can see that other than this overextension below the base, we also had this new high here and a tap at 1790, which did not hold. Therefore, in a mean reverting context, I'm risking for price to rotate back to the downside, in effect erasing all my profits. Since I already missed my target once right here, I decided to very intently watch the price action as we were nearing here the opening bell. It was encouraging to see that the buyer stepped up to defend here above 1780 and send us back towards the high. However, notice here that price actions were closing in on 930, was starting to cluster, and at this point, since I'm not certain whether the bullish sentiment is that resilient, and also because I have been dragged behind the bus in this position for a significant amount of time, I decided to back the profits and put this one on the board. I did opt out to exit here in the middle of this range here where price was oscillating and was roughly considered fair ever since, well, pretty much you can see 3 o'clock is here. This is the beginning of the European session, and ever since, if you draw a line here through the middle of price, you can see that we have had oscillations above and below, but we're roughly in the middle where price is considered fair. So it was a good place to take the profits for a combined total of, I believe, yes, 110 ticks, and just short of 3 to 1 on a $300 initial risk. This is often the case with trading. The hindsight is always 20/20 actually, and my decision to take the profits here had very unfortunate timing. With the opening bell, price rallied very aggressively through the highs, making new highs, breaking here the previous sessions highest price here at 1790, and in effect just within it seems 25 to 30 minutes doubling the amounts of profit. So you can see that I stayed in this position for just over 24 hours for 110 ticks, and just within another half an hour I could have had double the amount of profits. But such is the nature of the business. You have to make judgment calls, or in other words, decisions within complete information, and you have to also live with the outcomes. In this case, yes, a certain amount of profit was left on the table, but I was happy to open the week with a winner here, already into midweek, closing the first position. What will happen here by the end of the session is a very sharp turnaround in price and a rotation all the way back down to the bottom of this previous range or box here in the mid 70s, and I will follow this idea into the second part. If you like these videos, consider subscribing to the channel, like and share. Again, my name is Nikolai, and this is Tape Reading Concepts. I'll catch you guys into part 2.